Okay, now this is why you should not limit your investments just to the US. What's up guys, Brett here. I hope you're having a great week so far, and in this video I'm going to be speaking about why investing only in the US might not be the best idea. Now, being a 90s kid, I grew up in a world with a strong American influence, anything from Hollywood movies to video games, and it's pretty much the same for Gen Z and most other people as well. However, as the world evolves and other economies grow, that influence may well decrease. I mean, just look at China and India, for example. So anyway, just like Hollywood and Disney are diversifying their content, so should we as investors. We shouldn't limit our horizons just on the United States, and this is why. Now, reason number one is that not all great companies come from the US. A lot of them do, and just off the top of my head, Amazon, Apple, and Microsoft are just a few. Now, these great companies do have overseas exposure, and some of them actually dominate overseas markets. But consider that there are some markets where American companies have no penetration, where they don't exist. And these are the places where the local companies have great potential and have so much to tap into. Now, one obvious example is China, because this is one country where America's influence has basically been blocked out. There's no such thing as Instagram, Facebook, YouTube, or Twitter. None of these exist in China. And actually, I was in China a few years ago. I was there for work, and I remember opening my phone, going onto Google, and it not working. And I thought the reason for it not working was because my SIM card wasn't working or I hadn't activated it to work in China. But it turns out it was just because you're not allowed to use Google in China. And it's the same for Instagram, Facebook, and all these other companies. So anyway, instead, China actually have their own tech giants. They've got Alibaba, they've got Tencent, and they've got Baidu as well. But it's not only China's alternative products that are worth considering investing in, because they do also make some seriously competitive products that rival other companies, products that have been made elsewhere in the world, including in the US. Just take TikTok, for example, an Instagram rival that has recently taken the world by storm and was one of the fastest growing companies in the world in 2020. And then we've got China's electric car manufacturer called NIO, and this is a serious competitor to Tesla, and one that Elon Musk is definitely going to be keeping his eye on. Okay, so my point here is that whilst America has undoubtedly been the leader in the world over the past 40 years when it comes to innovation, other countries are now catching up. And that means that there are other markets to consider investing in. Okay, now reason number two is that other countries should not be overlooked. If you ask me, the gap between the current biggest economies in the world, i.e. China, the US, and a few others, and the rest of the world will widen over the next decade, just like it has since the turn of the century. So I do think that the US is still a great place to invest, but there will surely be insane growth and insane gains to be had in other countries as well. Think about who the next China could be, because in 1990, China were only the 10th biggest economy in the world, and even Spain were bigger than them. However, Spain is now 14th in the world. Just imagine investing in any of the mainstream Chinese companies back in the day. You would have seen some insane gains from that. So, as well as investing in the US, diversifying your investments into other countries and other emerging countries as well should be a consideration. Indonesia and Nigeria are two of the countries that are expected to grow significantly over the next decade, so maybe a good option. Now, putting your investment into these relatively untested markets does come with risks, although it does come with potential gains as well, but watch out for scams, especially if you're not investing or putting your money into the mainstream companies within these markets. One stock example is Grab. Grab are basically a taxi app company similar to Uber who operate in Southeast Asia, and they have the vast majority of the market down here, and they're expected to IPO in the next year or so. Okay, now reason number three is that other international companies or equities are usually less expensive than US companies. And one of the reasons for this is that all of the buzz and all of the hype is usually about US companies. Just think how overvalued some US companies have been in the past due to media hype, due to media buzz. For example, Tesla. Elon Musk tweeted himself that the Tesla stock price, in his honest opinion, was too high. So no proof needed right there. Although to be fair, we all know what Elon Musk is like, and there was probably a good reason behind releasing that tweet. Nevertheless, US companies definitely have the tendency to become overvalued because so much media attention is aimed at them. This stems from newspapers, blogs, and even YouTubers as well, because whenever something's been talked about in the media or there's hype about it, everyone wants to get on it, to get the views, to get the readers, to get the engagement, and that in turn leads to more people reading about it and watching it, and therefore potentially driving up the stock price. And then you've got the retail investors and the more seasoned investors as well, don't get me wrong, who plow money into these stocks, because it's not always a bad idea to buy an overvalued stock, but if you're going to do it, just be very careful and have an exit strategy. So buying overvalued stocks does always come with increased risk. Therefore, it's a good idea to consider investing in other markets where there's less potential for the hype, for the buzz, for the companies in that market to become overvalued. Reason number 4 then is because the US is currently in trade wars with China, as we all know, and this could affect their trade relations with other countries, with the EU in particular as well. So basically, trade wars between the US and any other country, it doesn't have to be China, will impact whatever sector is being negotiated. And at the moment, because so much of the tension is between the US and China, it's going to impact the markets where US and China do a lot of trade. And it's not just the tariffs that other countries and China are putting on the US in response to the US putting them on them, but there's also an element of self-sabotage as well, where when the US imposes tariffs on other countries, internal companies within the US are also going to be affected. Now, one example would be the hugely popular Apple stock, where the vast majority of iPhones are produced in China. And Donald Trump at the time, the Trump administration, was urging Apple to bring production back to the US, or otherwise face tariffs that could see a 10% increase on the consumer price of their products. Now, this is just one example of how US stocks can be impacted by trade wars. And although the Biden administration is tackling trade wars differently to the Trump administration, US stocks are still going to be susceptible to volatility until these two giants can settle their differences. Okay, now the last reason number 5, guys, is don't have all of your eggs in one basket, or in this instance, in one market. Now, investing has become more and more accessible in recent years and more appealing as well, because a lot of brokerages are offering 0% commission, which means that investing is no longer just for the super wealthy. The thing is though, a lot of these apps and a lot of these brokerages only cater to one market. For example, Revolut, which is one of my apps, and I've made a few videos on this app, only allow you to buy US stocks. And even if that's not the case, the interface of a lot of these apps, and even the ones that allow you to invest in the EU market as well, like Trading 212, they will set up their interface in a way that they show you like the most popular stocks and things like that. And more often than not, these stocks that are going to be in your face on all of these apps are large US tech stocks like Google, Facebook, Microsoft, and Apple. The list goes on, but most of them are the large US tech stocks. And if 2020 has taught us anything, it's that anything can happen and that we shouldn't be over-reliant on one nation when it comes to our investments. Because although the US is the main powerhouse when it comes to the stock market at the moment, and it has been for the last God knows how many decades, it might not be forever. Diversification is key, guys, and whilst it might result in lesser profits in the short run, it's basically a playoff against having all of your investments in one place. And just like you should always diversify your portfolio in terms of what sectors you're investing in, you should also consider diversifying it by investing globally as well. Now, the US has by far the largest market cap for listed domestic companies, and it's about 5 times bigger than China. And the reason for that is because the US can attract some of the most ambitious, some of the most influential talent in the world. And as long as it continues to do that, it's going to continue to thrive. And US companies in the US stock market will continue to thrive as well. So guys, the US stock market is a great place to invest. Don't get me wrong, the US stock market is an amazing place to invest. Just consider your other options as well and consider diversifying your portfolio across the whole globe. All right, guys, that's it. Thank you for watching. I hope that you enjoyed this video and it gave you sort of some ideas in terms of where to invest in the future. I'll see you next week. Thanks for watching. Bye, guys.